Welcome, everybody, to the SNN Network Canada virtual event. I'm your host, Robert Kraft, and thank you so much for joining us today. I'd like to introduce our next panel, which is titled Ideas Found in the Filings. This panel will be moderated by none other than Paul Andreola, founder and editor of Small Cap Discoveries. And with that, Paul, take it away.
Hey, thanks, Bobby. First off, I want to thank everybody for joining us. As Bobby said, my name is Paul Andreola. I am the editor and founder of Small Cap Discoveries. And Small Cap Discoveries is a newsletter dedicated to finding and highlighting some of the great Canadian listed micro and nano cap companies. So we spend a lot of time researching companies that meet our key growth and operational metrics and criteria. Now, we've invited 3 companies that meet our criteria and we believe highlight some of the great companies that you can find on the Canadian venture exchanges. All 3 of these companies we discovered by combing through CDAR. And CDAR is the Canadian financial equivalent to EDGAR in the US, and it's a filing system website that is freely available to any investors. So before I start, I do have to disclose I am a shareholder in all 3 of these companies. So now, without further ado, I want to introduce the 3 panelists that we have here today. From Medexus Pharmaceuticals, we have CEO Ken D'Autremont. From Route1 Incorporated, we have CEO Tony Busseri. And from BeWhere Holdings, we have VP Margaux. I want to thank all of you for joining us today. And why don't we start by having each of you sort of say hi and give a brief description of your company. And Tony, why don't we start with you?
Thanks, Paul. A very good day to you and to my colleagues on the panel. Route1 is a company that works with our clients to empower them to make better decisions using their own data. And when we talk about data in today's world, for sure, that means ensuring that the usage of the data, whether it's in transit, at rest, or in use, is done in such a way it doesn't create new risk vectors for the company or its network. And so principally, we are a company that's analyzing, visualizing, and securing our clients' data to create better sustainable outcomes. And I know it sounds very MBA-ish or cliche-ish, but we built our bona fides in the data security industry. We have a flagship technology called MobiKey that's used and has been heavily used over the last 9 months with COVID-19 becoming part of all of our lives. That's a work from home or teleworking technology. And as a result of the credibility we have with that technology being used by the US Department of Defense, we've been able to leverage our data security bona fides as we expand into data analytics and data visualization. And I'm sure as we wind through today's discussion, we'll probably talk a little bit about cybersecurity, advanced analytics, and the like. But what's unique about our company is the nature of our revenue streams. I think you got quite excited about it when you got to know it. There's a piece of our business that's a SaaS-based model, which means our clients are paying for a software subscription annually in advance, and we're basically getting 100% margin on that. So that's a piece of our business. We're principally focused here in the US. I'm based in Scottsdale, where it's a little warmer than back home in Toronto, Canada. And we're thrilled to be with you here today to talk about the company and about what you saw that was interesting for you. Thank you.
Awesome. Thanks, Tony. Why don't we turn to Margaux from BeWhere Holdings. Margaux, say hi and tell us all about BeWhere.
Hi, Paul. Thank you a lot for your support, the Small Cap Discovery Network. Thank you a lot, guys, for what you're doing for us. So BeWhere is a fairly small company still, traded on the venture exchange in Toronto. We are call it a software and a hardware company. We build and we design IoT devices and the platform that goes with them. We sell to the B2B markets, so mostly big companies. We don't have yet sales to the retail market, so that's coming up. This is our 4th year starting, and we have a lot of news that we're going to share with you through the couple days on the event, so we're very excited to come here.
Excellent. Thank you, Margaux. And lastly, Ken from Medexus.
Thanks, Paul. Thanks for the invite. Medexus is a specialty pharmaceutical company focused in a couple of different therapeutic areas, primarily autoimmune disease or arthritis, hematology, allergy. We're a little bit different in that we've got our commercial infrastructure fully built out in both the US and Canada and are generating strong revenue growth and positive EBITDA. So our focus now is continuing to build on that portfolio to produce even stronger EBITDA as we further leverage current infrastructure in those two territories.
Ken, I'm going to follow up with a couple questions. We'll start with you now. Specialty pharma, a lot of people aren't really familiar with specialty pharma. Maybe describe a little bit what specialty pharma is and how you're different than sort of the typical biotech company.
Sure. Specialty pharma for us is, the therapeutic area that we're focused in. So we're not trying to cover all of the pharmaceutical market. We are specialized and focused in a few different therapeutic areas. As I mentioned, autoimmune disease, which is really rheumatology. So the treatment of arthritis and associated conditions, plus hematology, obviously blood-borne diseases, allergy, which is obvious. So those specialty areas is really where we focus our infrastructure. So we don't need a massive sales force in order to cover the physician targets that we have. They're relatively small physician prescribing groups. So a sales force of 20 or 30 people in the US, which is what we have, can easily cover those targets. And so as we add the next product on top of an existing infrastructure, at a high gross margin, it produces excellent EBITDA. So that's what we're focused on. So specialty pharma in our hands means the execution of commercializing drugs in therapeutic areas where we already participate.
Mm-hmm. And to follow on that, I mean, you guys don't have, you're not a laboratory, you're not developing drugs from scratch. You don't have that risk profile. You guys really take drugs that somebody else has discovered and you take them to the North American markets. Is that not correct?
Correct. So we're a commercial organization. So we are looking for licensing and M&A opportunities to bring drugs into the North American marketplace that have been developed elsewhere. So the discovery risk is gone. The only risk that exists then is the registration risk, which is relatively minimal, and then the commercialization risk. And so for a drug that has been successful in other territories, that risk is also reduced because we know, what sort of share we can generate with that drug in our territory. So that's what we do. We take all of the development risk out of our business model and really focus on the commercialization.
And you touched on it a little bit, but where do you see the most growth opportunities for you guys?
Twofold. One, organic growth of existing portfolio. So we have a portfolio of drugs today that are early in their life cycle and will continue to grow, plus further business development or M&A. So looking for new products to bring into our portfolio that are in the therapeutic areas where we already participate, which will be future growth for the organization. So we have a very healthy business development effort that brings new products into our organization.
Fantastic. Why don't we turn to Margaux for the next couple of questions. Margaux, you mentioned, and we keep hearing a lot about the Internet of Things, IoT, and how it's going to change the way we live, work, and play. But how is IoT relevant to BeWhere? And then on top of that, let's add in 5G because you guys are involved in the 5G movement as well.
Sure. So IoT, I think, used to be a very big buzzword, as a lot of words in the capital markets. It's actually a real thing. So IoT, what it means, it's the Internet of Things. It's when you start connecting objects. So you can think about connecting your fridge, connecting your scooter, connecting your TV. Those are IoT things. In the case of BeWhere, we focus mainly on the industrial side of IoT, meaning we have essentially developed solutions based on IoT networks, which are LTM and narrowband IoT. Those are low power, 5G networks. They allow us to exchange a very small amount of data at a fraction of the cost of existing traditional networks like 3G, 4G, or LTE. And why it's so relevant to BeWhere is that we were essentially one of the first player on the market to create technology that will work on those new networks. So we first started developing our products back in early 2017. And where it's a bit revolutionary for us is now we can offer solutions that are essentially a fraction of a cost, which means that you can deploy your technology where before cost was just prohibitive. So, a simple example is, for example, tracking a portable toilet. Who wants to track a portable toilet if it's going to cost you $20 a month? Well, now with the IoT technology, the IoT networks, you can track it for $2 a month. And it makes a lot of sense because now you are in your ROI brackets. So this is how it's essentially relevant to BeWhere's growth. This is our focus.
Now, so you gave one good example of how this all comes to play, but I mean, there's a number of other real-world examples of how we're collecting data from different devices. Temperature, location, those are probably the obvious ones. We've seen a fair bit of talk now with, obviously the pandemic that we're in and the requirements to be able to track packages and the temperature variances. Maybe give us a few more real-life examples of some of the things that BeWhere products can do.
Sure. Well, very simply, and I'm sorry, I don't even have a device with me. It's all at the office. So what we have are little sensor box the size of a fat pack of cigarettes, and they have a GPS module on it. They have a bunch of sensors: temperature, humidity, light, and accelerometer. So think about a GPS tracker essentially, but it's using IoT instead of 3G or 4G. So kind of examples that we have especially in the current pandemic, is that you can actually use them to track, let's say, a shipping box, and you get the location. And with the sensors that are currently in our trackers, you can also track humidity or temperature inside the box. What we are is really a versatile company. So when we have a product, which is a standard modem, as we call it, then it's fairly easy for us to just add external sensors. So it's interesting in the pandemic where we can add temperature sensors that will fit some, government requirements on, for example, if we want to track cold chain products such as vaccine or so on. But we also work with governments to do, let's say, water pressure in the urban supply system of the cities, like we do with Toronto. So those are easy sensors that are easy to adapt to a whole, variety of use cases.
Perfect. Thank you, Margaux. Now, Tony, you mentioned the word cybersecurity. We're hearing a lot about cybersecurity these days. There's obviously an accelerated demand because of the work from home requirements that so many companies have. How have you changed your business strategy to address this? And if so, how and where do you see your greatest opportunities?
It's interesting, Paul. From our perspective, the market's finally come to us. I don't mean to be cocky about this. We've been soapboxing for some period of time, almost a decade, with the inherent risks of using virtual private networks or browser-based solutions for people to be mobile when they want to access corporate resources, government resources. And quite candidly, our flagship technology, MobiKey, has gone into high demand with a number of the enterprises that really value their data security. Unfortunately, one of the hidden it's not really so little, one of the hidden items that will come out of 2020 is the amount of data that was lost or stolen as a result of the methodology deployed by enterprises to support the work from home or teleworking requirements of their businesses, or quite frankly, organizations just collapsing under leveraging a VPN setup, and their employees couldn't access corporate resources. Forget about data security issue, just simply they weren't able to work. What happened in March or April of this past year is a number of our DoD clients expanded the use of our technology, MobiKey. And what it allows them to do, simply put, is access those resources. A two-factor or smart card-based approach, authentication approach, and then leveraging their resources without extracting them and bringing them to where they are remotely. And that's a unique approach for MobiKey, and we saw great growth with that. We would expect there's going to continue to be strong growth. So the cybersecurity principle, I think, is still in many ways in its infancy. We went through a world crisis. Organizations have looked to quickly put in place support for working from home. Now the next order of this is to improve their approach to it such that they're not taking on the economic consequences of some of the older school approaches to delivering mobility or working from home. So I guess the short answer would have been to this is that I think the market's come to us. It values what we bring. We've seen growth within the financial services sector, banks I'm thinking of in particular, certain state and local governments. And I would confirm as a distinguishing factor that it's unfortunate, but enterprises, whether that's in Canada or the US, are quite a ways behind some of the more secure government entities. And I would say that the governments within the US are quite advanced to a number of the governments in Canada as it pertains to data security practices. And one of the reasons a Toronto-based company was founded almost 15 plus years ago is doing 99% of their business in the US is because the market respects and pays for what we're bringing to the table. So I think it's still a very early stage opportunity for us. We expect great growth within our cybersecurity product division, which again is the working from home model. We also have other technologies that are purely for user authentication. I won't go into too much great depth with those, but we've been a net winner because of COVID-19, and we would expect to see continued growth. And I think it was talked about earlier, but SaaS-based models allow us to sell. The revenue numbers don't always look so sexy, but they create great gross profit and EBITDA contribution. And again, I think one of the things that captured your interest when you looked at us as a company is we are running at $30 to $40 million a year revenue. We're EBITDA significantly positive. We generate our own cash flow that allows different organic growth and new product opportunities to be brought forward without having to raise capital. So hopefully that answers your question. Maybe a little long-winded there. My apologies.
It does. Now you did mention something that also piqued my interest. I mean, you guys work in the cybersecurity field, so obviously, it's important to be good at what you do. But maybe name some of your clients. The Department of Defense is not a small organization, so obviously you've gone through the hoops. So maybe touch on that a little bit.
Yeah, and thank you for the question. I think it really underscores what a smaller company has done competing with the likes of Microsoft and Cisco and other players. When we're working with the DoD, it's not, oh, we have $100 of sales with this small group. We're talking about fully authenticated ability. What does that mean? That we have authorities to operate. So our infrastructure, our private cloud infrastructure, our software licenses, applications can reside within their networks. And so the groups we can talk about because they're public is we work with the Joint Service Provider, which is a component of DISA with the Office of the Secretary of Defense, supporting a number of thousands of users using our technology, the US Navy, the US Marine Corps, the US Army, and there's certain intelligence community groups we can't name because we're not allowed to, but our clients using our technology. In all cases, a group would have had to authorize the use of our technology, which again is not a 30-day process. An ATO or an RMF takes anywhere between 12 months and 3 years to receive. And so we've been vetted, let's call it, and the technology is strong, has not created a new risk vector for the Department of Defense. It's a lot of people say we do business with the DoD. I'm glad you've invited me to clarify. We don't just do business. We're approved accredited technology in mission critical requirements. Yes, people in payroll and other roles would use our technology, but our technology is used where we cannot miss on whether data is protected and secure or not. The consequences can be quite severe if there is a breach.
Mm-hmm. And the other thing you touched on is the fact that you sell product, but you really collect recurring revenue, which is something that obviously appealed to me. So that's fantastic. Margaux, I'm going to come back to you and talk a little bit about that as well. Let's talk a little bit about the sales model and maybe some of your clients. There is a pretty significant recurring revenue component to your business as well, is there not?
Yeah, so I think Tony said it very well. We are essentially a SaaS model as well. So we sell hardware and then we call it recurring revenues. I think that's one of the key metrics that you want to look at when you look at a company such as BeWhere or Tony's. Our industry, given what I said earlier about the IoT, the cost of deploying this technology, we are in a mass market industry. And it's interesting to mention, what are some, let's say, growth accelerator, if I can say that with the English accent correctly. I think COVID for us has been quite the, it was quite the experience to start, but then we have seen also an acceleration in the sales cycle of a product. And I think Tony nailed it on the head when he said, well, suddenly people are working from home, they need some remote technology. And this is exactly what we do. We offer, remote monitoring to companies that can't necessarily have their, the technician on the field to monitor where their trailers are, where the flatbeds are, and so on and so forth. So recurring revenue.
Yeah, no, for sure. And again, that's something that appeals to us, is the ability to have a product out there and you just collect, monthly revenue. But one of the interesting things about your business is, like, in reality, you don't have a sales force. You are partnered with very large entities that go out and sell your product. Maybe describe that a little bit, and then who some of those partners are.
Sure. So yes, it's interesting. So when we went public in 2016, I think there was 10 of us. We're now in 2021 and there is 12 of us. So very small sales team, yet we went from 0 to over 6 million in revenue in 4 years. So our strategy is essentially to work with resellers, so a distribution model. So, we sell the hardware to them and then they pay us the monthly. We do the same thing to their end user. The advantage that we have with this model is that we don't need to spend a lot of money in marketing or advertising or any of those cost centers that are usually linked to selling products. In our case, I can't really talk about our end users because most of them are under NDAs, but I can talk about our resellers. So we've got, I'm sure you noticed, we've got the big guys, we've got the Bell, we've got the AT&T, we've got the T-Mobile. We've got Fortune 500 companies that are reselling our products, mainly in North America for now, because the networks are not necessarily all rolled out in the rest of the world. But then, because we have such a strong partners, we also have governments and cities that work with us. And with the pandemic, I think those have suffered a little bit or have slowed down on the, the purchasing because they had to put the money somewhere else. They had to, help people out during the pandemic. But we're seeing it start to grow again. So, yes. Sorry, I'm just...
No problem. I think
I'm trying to think in English.
You've done a great job. No, you've done a great job. Perfect. Ken, why don't I turn to you a little bit? Let's talk a little bit more, dive down a little bit into the details of your model. You guys operate both in Canada and the US with a sales force. And really the way I like to describe it is when there's a new product, it immediately goes out to your sales force and you're out there selling it. Who are you really selling to? And how robust is that opportunity of new deals that allow you to keep sort of filling that pipeline?
Sure. So let's start with the infrastructure first. The infrastructure in the two territories is about 25 people who are in the field right across the US calling on rheumatologists and hematologists, supported by another 25 who typically would be in an office in Chicago. In Canada, we've got 19 calling on allergy and primary care, another 4 calling on rheumatology with 10 people who support them. So the infrastructure in both of those territories is completely built out. And those people in the field are making daily calls to physicians and promoting our products. And for us, that is a recurring sale, as a previous panelists have described. Once we get somebody onto one of our drugs, because they're for chronic diseases, they continue to get those prescriptions refilled because they need our drugs to live a normal life. So that is how the sales model works. And so as we bring a new product for rheumatology or for hematology, those products go into the same sales force hands. And so our infrastructure doesn't need to grow in order to grow the revenue. And I think a perfect example of that in action has been our revenue growth has gone from 10 million to 34 million to 74 million to this year now over 100 million, but our SG&A has been basically flat. We added a drug this past February, which did 30 million US net revenue, but our SG&A costs or our expenses only went up by 8%. So that has the effect of, really reducing the ratio of SG&A to net revenue fairly dramatically. It went from 65% to 45%. So obviously all of that drops straight down to EBITDA. And so that's, in a nutshell, how our business model works, and why, continued growth as we go forward is even more compelling because we're already EBITDA positive, cash flow positive. And as our revenue grows without changing the expense line very much, obviously we produce really good returns.
Mm-hmm. So SCD and myself personally, we've been very successful in owning some of these specialty pharma, and I think that's one of the key drivers to specialty pharma is just like you said, it's really about filling that pipeline. Once that infrastructure of the sales force is built, it's a matter of continuing to fill that pipeline. Now, you've got a number of drugs and therapies right now that aren't commercialized yet, but are coming. Maybe tell us a little bit about which ones maybe get you the most excited.
Yeah, so very recently we announced that we have licensed a product called triamcinolone hexacetonide for the U.S. That is a intra-articular corticosteroid. So basically a drug that they inject into the joint for arthritis patients. And it's the longest acting one in the market. And that's really important for children because a child's not going to hold still for such a procedure. So the physicians want to use the longest acting drug, and that's us. So we have just licensed that. We'll be bringing that to market within the next 12 to 18 months. In Canada, we have two drugs that we're just bringing to market. One is called Gleolan. It's for glioblastoma, the same tumor that Senator McCain passed from, or Gord Downey have tragically hit. It's the most common cancerous brain tumor. What this drug does is help the physician visualize the tumor so that they can do a better job taking it out. So revolutionizing how they go about treating this particular condition. And then we also have a product called treosulfan in Canada, which is for the treatment of various types of leukemia. And again, it's a brand new way to condition bone marrow prior to stem cell transplantation. And it's, has fantastic improvement in survival for these patients. In fact, about a 26% improvement in survival. So that drug is going through the registration process in Canada. We're working on the licensing for that for the US. And so those drugs, will be very, very significant drugs to our revenue growth going forward. And again, I keep reminding you that our sales, our infrastructure, our cost structure doesn't have to change very significantly in order to commercialize those. So at a high gross margin for those drugs, much of that drops down to EBITDA. So, that's why our growth story is so important, because it's not just revenue growth, it's strong EBITDA growth as well, and the resulting cash flow.
Mm-hmm. No, I mean, that's one of the key criteria we look for in a lot of the investments we make. We want to see a company with good, solid sort of existing growth, but I almost call it the optionality of new products, new services, new things like that, because you get tremendous leverage being able to play off of that. So that's fantastic. Margaux, why don't we sort of ask you a similar question? Guys, you're innovating, you're coming up with new products all the time. maybe give us a sense of where and sort of what investors can look for in terms of technology, new technologies, new products, new areas. Let us know what you got.
It's still a secret.
Tell us what you can tell us. Maybe just the direction. Are you going smaller? Are you going bigger? Are you going faster, slower? Those sort of things. Yeah.
Sure. So we've got, let's put it that way. We've got two kind of products segments. We have got the asset tracking products, which has the GPS on it and then the onboard sensor. So it's mostly like a little box. This is more oriented towards the mobile IoT, so tracking things that move. And then we have the connected sensor, which is kind of a much newer market, especially in IoT. So those would be more fixed sensors to measure like soil moisture, the water pressure, the water flow, and so on. So the big thing for us is the inside. The inside is pretty much the same. All we do is like create a new enclosure, add new sensors, so we keep the cost down when we create a new product. And because this IoT industry is so new, we have a lot of opportunity. The market is phenomenally large and there is not that many players on it right now. And because we're one of the earliest player, we have a really good grip on where it's going, the cost of the components, and what we can do in the future. And because of our size, we can also develop a new product like that, which is usually a lot quicker than big companies. So we've got our tracker, or currently tracker, we'll say the asset tracking the asset tracking device, excuse me. And now we're kind of looking at making it smaller. Remember, you know, in the old days, your radio, I mean, I don't know how you are, Paul. I've only seen it on TV.
No, yeah.
But now, you know, I have a phone that's the size of virtually nothing. So it's the same idea with what we want to do with our devices. We want to make them smaller, cheaper, and more performance. So what you can look forward for next year are smaller devices, maybe even more versatile with more technology packed on it, and still remaining at a very low cost.
Mm-hmm. Awesome. And Tony, I'll turn to you sort of with the same sort of question. Maybe two-part question. You know, you raised a little bit of money recently. You know, you've grown in the past through M&A, but tell us what new things we can look forward to, whether it's, you know, a new division or a new line of business, or even some sort of new technology that you're excited about.
Yeah, I think it's probably a little broader answer to that question for us, Paul, that at least from an American standpoint, we've seen communities pivot quite a way from the way they used to deliver law enforcement or safety. And we saw that with the social unrest in June, which led to some interesting opportunities for us. And so the deliverance of public safety has created a great business opportunity for us because we're players in advanced analytics by using license plate recognition technology, as well as partnering up with others with body-worn cameras, but in all cases, extracting data, securing it, and providing it to those that should have access to it, with the use case obviously dealing with real-time security issues to things that are much more simple, such as creating new revenue models for communities. But I like when I talk about new products, I guess for us, I think ultimately what we're trying to use, again, is the client's data to create better outcomes. And outcomes can go everything from health and safety to creating new tax bases that help our communities that have gone through very tough outcomes here over the course of the last 9 months with COVID. But when you look at the capital raise, if I'm jumping around here a little bit, that you referenced the $3 million we just raised in the last 30 days, that's putting money into the till for the next round of M&A growth. For us, as I've been quite outspoken about, we look to acquire off of a couple different bases. One is if we can acquire a company that drives new relationships and new geographies in the public safety arena, it allows us, even if we're buying a business that's done transactional work, i.e. reselling rugged devices, if I can then leverage that strong relationship towards upselling them a MobiKey or bringing them an LPR-based outcome, that's got good value. So if we're buying things at 2.5 to 3 times cash flow, And we're able to leverage that towards new organic sales by bringing our current offerings to the table and or developing new ones. So here's a good example of one, is that we have a number of smaller sheriff departments or police forces in the US that can't afford the cost of having their data stored in the cloud with Microsoft Azure, or you can pick your other providers. And we're able to go to them, maybe they have only 2 police cars, and deliver an on-prem offering that allow them to get the same benefits. And we're able to deliver that to them at a lower cost. So we're able to create, quote unquote, a new product, Mobi Cloud. And we're about to launch that based off of what our clients are saying. They want to be able to advance and share data with neighboring police forces. They just can't pay for maybe some of the more expensive offerings. And we're able to slide into that secondary or tertiary market with our own example of. So we, it goes back to that central theme. We've had a pivot here in America around public safety. We're very active in that with the data security end of it, the advanced analytics end of it, coming up with new products or bringing, products to smaller communities that haven't been able to access them historically. And again, going back to it's organic growth coupled with acquisition growth, where we're leveraging those new strong relationships we're buying and bringing new services or products to bear. And in most cases, they're our own products. But from time to time, we resell GTAC or Panasonic rugged devices. That is transactional basis, transactional type of revenue, which isn't the same value as our SaaS. But it's been mentioned a number of times by all participants on this call, which I'm thrilled to hear. When we're looking at EBITDA, that's a wonderful metric. And I think it was talked about with the pharma business here. We also look at gross profit divided by our SG&A costs. And we look at for improving returns in that area. So if one's been following us or they're just new to the Route 1 story, we've taken a 2.2x multiple now into the mid 3s. And so that what it means is for that same amount of SG&A investment, we're now driving greater gross profit or free cash flow per dollar invested. I think that's a wonderful metric in today's world of IFRS. Balance sheets get a little crazy and sometimes hard to look at the classic return on equity or return on assets metrics. So what can an investor look at? My view is, and it was talked about earlier today, if a firm is driving more cash flow per dollar invested to generate it, they're doing something right. Because that's not funny stuff with IFRS or accounting. That means they're being more efficient and driving greater of with a similar dollar. And we're big advocates of that. We're not asking people to buy into that we do something different. Just take a look at what we're doing, where the combination of SaaS revenue growth, conjunction with some transactional revenue with cross and upselling, without having to materially change the SG&A function, but we're getting more of for the same buck in. I think we're, at Route 1 from our area of interest, I think we've done a heck of a job over the last 6 quarters. And I think the best of our business model is going to start being seen as we move into 21 and 22.
Mm-hmm. No, I agree. Cash generation is absolutely key, and it clears away a lot of the fluff around there. I'm going to take a question a little bit, a different tangent. Obviously, we're in the middle of a pandemic. Things are actually about as bad as they can be right now. In some cases, some businesses are seeing that their industry is actually, rapidly advancing because of the pandemic. But how has it affected your business, both on a sort of operational basis and then opportunity basis? That's to you, Tony. I'll stick with you.
Thank you. I got to tell you, this has been the most demanding 3 quarters of my life as a CEO. You know my background, I've built billion-dollar companies. This has been really, really challenging because of the demands. And at the same time, you need to be respectful of people's lives and family situation and their confidence coming into office or servicing a client. I am thrilled with the staff here at Route 1. We vacillate between low and mid 50s number of employees. They're in Toronto, Canada, Cincinnati, Boca Raton, a bunch of different places. And we've had a wonderful group of people deal with some real trying situations. And so I'm not trying to be cute about this. What COVID has done is really highlighted, my view, the exceptional talent we have here at Route 1 and our ability to deliver the outcomes our clients are looking for, whether it be, again, the Pentagon, right down to Joe's Pizzeria, who's trying to stay around and survive in today's environment. And so with intent, we made a decision early on that where certain roles may not be required as a result of the work from home, to pivot and retrain people so that they could be part of the team. We've actually aggressively grown. At the start of COVID, we were in the mid to low 40s of employees. So we've added probably about 10 people over the course of the last 3/4 of a year. And why? And that's because some really good talent became available, and we were glad to scoop it up and find roles again for our core family to stay with us. So what COVID has done is really highlighted the things we can do well and given us a chance to step up and work with some interesting clients that deliver better outcomes for them.
Tony, thank you so much. Margaux, when we sort of asked you the same question, to the pandemic, how do you guys change the way you operate, and how do you see any improvement and opportunity because of it?
Sure. So I think we were, well, personally, we at BeWhere, we've seen a bit of a slowdown with the virus since December. We've noticed that China was slower to deliver our components already back in December. So where I was personally surprised is how the rest of the world was not more worried about what was coming to us. So we'll say that when COVID and all the lockdown fully hit, the North American and the Europe continents, we were kind of mentally prepared, I would say. What we were not prepared for is the amount of negativity around it. Obviously, the death, the people losing their job, that was tough. So for 2 weeks, we weren't really sure how it was going to go. Because most of our clients are also companies that have people to employ, and in many different industries, whether it's construction, transport, hospital, police force. And I think there was a shift that happened probably in April, so maybe a month after the pandemic. Things suddenly accelerated. Some sales that were pending, like a month or two, pilots, they suddenly came in really quickly. And I think we were happily surprised. And the demand just kept growing. So that's for the private sector. For the government sector, that's where it slowed down. So we had deals with some cities and municipalities that were pending. We were just pending the purchase order. Those got to stop. And it makes complete sense. The money had to be relocated towards COVID relief funds. But those are also the most smallest part of our revenue. So as Tony said, we have been incredibly busy during the past 9 months. And again, there's only 12 of us, so we just added to the team recently an accountant. But the sales force is only, myself, the CEO, the VP of sales, the CEO. I mean, we all do sales. The CTO does sales as well. And the number of emails and calls that we received was pretty incredible. And we're very thankful that, that happened to us. So I think, we're probably going to see those sales continuing. It just accelerated our business. It shortened the sales cycle. I can't tell you if it's going to continue when things go back to normal, maybe, 5 years from now. I'm trying to be optimistic. But at the end of the day, we are very blessed what, by the pandemic has helped our business move faster.
Fantastic. Now, Ken, I'll turn to you now. I recognize that we've had this discussion before, and the pandemic really hasn't had much effect on the operations or your business. But anything you can sort of tell us that may have been some sort of effect?
Yeah, I think, a positive effect in a way. As you know, our portfolio continues to grow even in spite of COVID because it's for chronic disease. People need our drug. But the way that we've gone about informing physicians and promoting our drugs has dramatically changed, because access to physicians has gone to zero. Face-to-face calls don't happen anymore. There's no access to hospitals. So we've gone to virtual means like this, and communicating with physicians virtually, putting programs together online. And I think a great example was Gleolan, the drug for glioblastoma, neurosurgery. We've been going around teaching neurosurgeons how to use our drug during brain surgery using virtual means like this. So that's been stunning to me. I didn't think that would ever happen, but it was a necessity, and the physicians wanted to learn, and this is the way we did it. So it's been an incredible learning experience, and I think it's accelerated, this virtual sort of promotion in the pharma business fairly dramatically, as it probably has in other industries. So I don't think we'll go back to the way we used to do things completely. It'll be some kind of a hybrid, which in fact, has a benefit in our costs, because we don't have as many people out there traveling about and spending money. So actually it's been a benefit for us to try and find and explore these new virtual tools.
Mm-hmm. Fantastic. So the clock on the wall tells me we're starting to run out of time. So I'm going to give everyone sort of a last couple minutes just to, give the investors or the listeners here sort of a key message that you want them to walk away from this presentation today. Go ahead, Ken. I'll start with you.
Thank you. I think the message here is, a strong business that's well established, that's going through dramatic growth. And that growth in our hands means really strong EBITDA growth and cash flow growth. We've gone from 10 to 100 million. Now we see ourselves going from 100 million to 250 million with the type of drugs that we're bringing to the market. So continued strong growth, utilizing the infrastructure that's already in place. So it's really a story of leveraging existing infrastructure.
Fantastic, Ken. Thank you so much. Margaux, why don't I'll ask you the same question. If you want to give any sort of key message or any takeaway for our listeners, what would that be?
Sure. We're obviously much smaller than the other guys here, but I just want to say, look, we are executing. We are delivering what was our message since the beginning. We are building a business. Our revenues have grown tremendously. We have, positive net income. We're starting to generate cash flow. Our stock is starting to go back up as well. And, we are delivering on everything that we said. We have a clean balance sheet. We have no debts. We are, utilizing the money where it should be. So, I just want to say to our investors, stick with us. We're delivering as we said we would do. Just be patient. It's coming.
Excellent. Thank you so much, Margaux. And then lastly, Tony, what would be a key message for everyone?
Yeah, I think one of the message has been, Paul, and obviously you liked it when I first met you, is that we're looking to leave the 21 year running at somewhere between 75 and $100 million of revenue. Not that revenue is an important metric, but it gives the quantum of growth we're looking to do. Call it towards 100% top line growth, and we would expect to see our gross profit and EBITDA margins expand with it. We think there continues to be strong opportunity to build off of public safety relationships with advanced analytics as well as data security tools. And from there, we think bringing new products to the table are just going to mushroom the depth of the relationship. If I was to be a little more bullish, I would say that when you get towards $100 million, the question is whether you're a good fit with the larger system integrator and the verticals we're in, or you're going to take this to $250 million or $500 million in size. We think we have a business model, we have a platform for growth opportunity, and we've been doing this during very challenging times of COVID-19. And as the world gets back to normalcy, I think some of the things we're bringing to the table will be valued that much more. So we look forward to sharing this story to more ears and moving the business model down the field even further. Thank you.
Perfect. Now I lied. I'm going to give everyone one more question. Tony, what's your symbol and your website if people want more information?
Let's start with the website. It's Route1, however you want to say it, ROUTE numeric 1.com. You can find us on the TSX Venture at ROI, and within in the US, OTCQB based, we're ROIUF. Hopefully that answers both your questions. Again, thanks for the opportunity today.
That does. Thank you so much, Tony. Margaux, same question, your symbol and your website.
Our symbol on the venture is BEW, Bravo Echo Volkswagen. Our website is BeWhere.com, BEWHERE.
Perfect, thank you. And thank you for joining us today. And Ken, lastly, symbol and website.
Yeah, the symbol of Venture Exchange, MDP, Mother David Peter, and the website is Medexus.com, MEDEXUS.com.
Awesome, awesome. Ken, Margaux, Tony, I want to thank you for joining us today. I really appreciate the time, and certainly investors and those listening, I think it's well worth taking a good look at these three companies. Lots to like here. And at this point, Bobby, I'm going to turn it back to you. Bobby, from my standpoint and SED, I want to thank you for giving us the opportunity to present these three great companies.
Thank you, Paul. And thank you all for joining us today for this panel. Best of luck, stay safe, and I look forward to our next update.
Cheers, folks.
Bye. Thank you, Paul.
Thank you. Bye-bye.